And it's another trading day right here in Lagos, Nigeria, watching Business Incorporated. Here's what's coming up in the next 55 minutes. Banks in the country today begin the direct deduction of ₦6.98 transaction fee from their customers' airtime balances. And Israel is set to resume gas exports to Egypt as soon as tomorrow. Plus, South Africa's headline inflation that remained unchanged at 2.8% year-on-year in May. And it's great to have you join us, Ladi Williams. Let's get on to find out what's playing out in the markets that we track now, starting with oil prices. We've seen oil prices are still a little subdued at this point, but it ticked up in early trade after ending the previous session up more than 4%. On worries that Iran-Israel conflict, that could disrupt supplies, and we're seeing the price there still staying steady in that $70 range. That's for Brent, $76.58 a barrel, up 0.17%. We see WTI, that's the US grade, that's at $74.96 a barrel, up 0.16%. So investors there watching out for what's playing out. We see US President Donald Trump called for Iran's unconditional surrender as the Iran-Israel conflict enters the sixth day there. So we're seeing that volatility right there in the oil market. We'll drill down on what to expect with oil prices going forward. But let's get a check on metals now. We're seeing gold prices at edge lower today, as investors refrain from making significant bets ahead of the U.S. Federal Reserve's policy decision. So much for investors to watch out for at this time. We see spot gold down 0.1%, there, $3,386 per ounce. U.S. Gold futures, that's down 0.10% at $3,405. Then across board for platinum, palladium, and spot silver, it's all green. There, 0.20%, that's for silver, $37.23 per ounce there. And all eyes on the central bank in the U.S. They're expected to keep rates steady. But investors will look for signals on future cuts. That's forward guidance at this point, and definitely that will impact sentiment in most of the markets that we track. And we see banks in the country today, they'll begin the direct deduction of ₦6.98 transaction fee from their customers' airtime balances rather than their bank account. So I guess at this point you need to have more airtime for all those charges. This follows the resolution and adoption of the model between banks and telecom operators in the country in a bid to resolve persistent disputes over an estimated 250 billion naira debt for USSD service charges. Under the new model, in line with a directive from the Nigerian Communications Commission, as the NCC, users will receive a prompt at the start of each USSD session, and the airtime will only be deducted upon confirmation, provided there is sufficient balance. The announcement by the Association of Licensed Telecom Operators of Nigeria, that's ALTIN, overrides the earlier notice issued by some banks earlier this month, claiming that the deduction would start on June 3rd. And the central bank says the Nigerian banking industry remains strong despite its recently issued directive for routine transitional guidance to banks to navigate post-forbearance adjustment. A new statement which aims to calm market jitters over the recent directive. The financial market regulator stated that the step is part of CBN's broader sequence strategy to implement the recapitalization program announced in 2023. A circular from the CBN dated June 13, 2025, had instructed all banks currently under regulatory forbearance to suspend the payment of dividends to shareholders, bonuses to directors and senior executives, and investments in offshore subsidiaries or new foreign ventures. And you see the Odua Youth Program, the official opening ceremony of the Agro-Industrial Hub, the flag-off of the Southwest Agricultural Sustainable Development of Maize Micro-Enterprise Farmers. They say they project in the partnership there with British American Tobacco Nigeria Foundation, Okeako and Ekiti states. They had representatives of the state governments, the three industrial bodies, and beneficiaries, among others, in attendance to brainstorm on issues of food security in Nigeria, That's become a major challenge facing farmers in Ekiti State and across the country. Take a listen.
This program is about empowering our youth to begin to return to the land and see that there is a lot more to gain than doing other activities out there, because we realize that a lot of land is available and these land are very fertile, and we wonder why we are still struggling with food insecurity in the country. So this is a beginning of addressing that food shortage in the system.
Okay, maybe economic value.
From an economic value point of view, you remember that when you talk about economic activities, it is production, distribution, consumption, and it goes around again. So if you're able to produce both goods for consumption as well as goods for disposal, you're able to get additional income. And disposable income at the end of the day is what matters. So you're able to now engender a lot of economic activity in the system.
And to other matters now, see reaction to trailing the central bank's recent directive for domestic banks and currently under regulatory forbearance. The chief executive officer of Cowrie Asset Management, Mr. Johnson Chukwu, that he made comments early on Business Morning, and he did say, although the directive is likely to affect the tier one lenders in particular, he believes that the big banks have the shock absorbers to mitigate the impact of any outcome. Take a listen.
The big banks will be the most affected because they want a bigger balance sheet. The ones that had the capacity to lend material or large ticket loans, create large ticket loans. But having said that, it's clear to me that Zenith Bank's response is going to be in tandem with the response we should expect from other banks. These banks, these top 6 banks or so, who they call, I think, Fugas, First Bank, First Bank, United Bank for Africa, Guaranteed Trust Bank, Access Bank, and Zenith Bank, which are the biggest, what they call systemically important banks in the country, all have the balance sheet to weather this challenge. But most importantly, I do not even think that it will affect their current shareholder fund, because many of them are making earnings that are sufficient to write off these loans within a financial year. Take, for instance, a bank like Zenith Bank. If you look at the first quarter report of Zenith Bank, their total gross revenue was about 950 billion naira, billion naira. Net profit before tax, from which loan provisions will be made, was about 350 billion. So if you even take the first quarter performance as a run rate for the next 3 quarters, it seems to me that Zenith Bank will make a minimum of 1.7 trillion naira as profit before tax. So it can actually absorb a provision of about 1 trillion naira and still be in a position to pay dividend. And I think that will apply to many of these banks that are affected, because the environment is quite good in terms of profit ability of these banks. Take, for instance, the kind of money they're making from their net interest income. Look at their commissions and fees, which has ballooned as a result of people using multiple service delivery channels that are cost efficient to enjoy banking services being provided by them.
All right, now to our first conversation. We see the ongoing conflicts there between Iran and Israel has escalated tensions in the Middle East, one of the world's most strategic oil-producing regions. We're seeing global oil prices have fluctuated sharply as markets respond to fears of supply disruptions, geopolitical uncertainty, and potential sanctions. These developments come at a time when many countries, including Nigeria, are already grappling with high fuel prices, subsidy reforms, and challenges in domestic refining capacity. We also had the latest monthly oil production reports there coming out from OPEC. That's the one for May. Let's discuss all of this now with Chinan Dekwal, is the Vice Chair, African Energy Council. Joining me via Zoom. Great to have you on the show.
Hi, Lottie. Pleasure to be here.
Fantastic.
Catch up.
Yeah, so I know I always like to catch up with oil production reports there for major producers at this point. We have the latest one for May. Give me your key takeaways from the latest MOMR from OPEC.
So, Lottie, if I just start from very high level, I think many people would recognize that in the last OPEC report, there was their message from OPEC Plus that they will put approximately 411,000 barrels per day in the month of May. Well, guess what? The number of barrels they put onto the
All right, we have some disruptions there with the network. We're still talking to Chin and Dickwell. Then it's all about what's playing out in the oil market. At this point, we're seeing issues there with geopolitics impacting oil prices and also talking about oil production. At this point, seeing that oil production that dipped for the month of May, and that's for Nigeria and some of the oil producers right there. We always track those reports to see how most of these oil exporters are doing when it comes to production of oil there. We'll try and get Chinan there to contribute to what's playing out in the global oil market. At this point, we're seeing traders in the oil market. They're trying to navigate all that's playing out right now with the geopolitics in the Middle East and the tension right there. And what does that mean for fuel prices in countries like Nigeria and major economies? We're still going to be we're going to figure out what's going to happen with oil prices going up, and definitely we know there's that relationship between the global oil price and fuel prices, and we've seen elevated prices in Nigeria, even though definitely we've seen those ex-depot slashes there from the Dangote refinery. Will that be able to navigate some of the price increases that are expected, with fuel prices when oil prices actually go up so much to figure out there. Let's see if we have Chinan again. Chinan, I lost you for a moment there. Are you back?
back and really speak about that. The connection just went out. Yeah, back.
Fantastic. So you could conclude your thought there. You're talking about the latest report there for oil production from countries like Nigeria. That's data from OPEC.
In this context, 3-4 months, it's been relatively flat. I would say we've been oscillating between 1.5 million barrels per day and about 1.4 million barrels per day. So I'll take us back to April. We were notching 1.48 million barrels per day. Unfortunately, in May, we dipped about 2% to about 1.45 million barrels per day. So not very significant, but certainly a dip compared to where we were. So I think the overarching message here is that we need to break out of this zone where we are. If I take us back to January of this year, we're 1.53, which was something we lauded a lot because we're right there at the OPEC production quota. We've not been able to break that and go one beyond that. So I think something for us to think about with that.
All right, so looking at the conflict in the Middle East, there definitely it's all about what's playing out with Israel and Iran at this point, with the escalations between both countries. We see the impact there in the oil market. Is it for sure going to be elevated oil prices, with the tensions that we see there, or is there a possibility, oil prices might not go up?
So, I mean, you would have seen that it's a super complex situation, and I'll be quite the way traders are pricing things in is super complex. The reason for that is, if you think about it, when many people think about conflict in the Middle East, just the thought of it, would put $5 per barrel onto the oil price. Not quite happening here because the variables are super complex. You see that, yes, there's bombardment going on, yes, there's conflict going on, but if you look at today, price has actually been coming down because the experts who are reading around the conflict can see that certain key indicators in terms of the conflict, the risk factors are actually coming down. So we definitely expect the price of crude oil to be $80 per barrel, $90 per barrel. I'm not so sure any from the signals we're seeing right now. Price of Brent, yesterday and today around $74 per barrel. So there is potential for that to go up if certain critical factors are breached. But I think so far, all of the signs that we're seeing, it does look like more of a downside risk than upside. So we expect that we might be around here in this zone for quite a while, except if certain things do happen in the Gulf. Then I think, unfortunately, $100 per barrel, maybe even $120 per barrel, depending on how the conflict goes, will not be off the table for this. So, critical point there, let me just put it out. If the conflict escalates to the point where the Strait of Hormuz is blocked for some reason, or we have a huge catastrophe, then I think under those situations there'll be disruption. We can see the price of crude oil go to $120. Now, bear in mind, even now as we speak, some oil facilities were hit. On both sides. We had a refinery on the Israeli side, we had a refinery on the Iranian side. But all of those have not, the price of oil very high. I think there's certain critical indicators that could make that situation young.
Right, and you did mention $100 per barrel oil there. Which countries or regions do you think would see the sharpest rise in fuel prices? If that happens, and definitely we know that relationship between global oil prices and fuel prices.
A straight question. Any country that's had completely liberalized markets like we do in Nigeria, would see the impact of that immediately. What's the reason for that? The reason for that is because you're buying crude oil at international markets. So you're procuring time potentially at $100 a barrel. Once it's at that price, then you immediately pass it on to your consumers. So a country like Nigeria is entirely experienced. Before we had a subsidy regime, which is widely criticized, and I agree there's lots of all of those reasons. Subsidy regime is gone. That cushion basically is gone. Right now, we're dealing with pure play market forces. If the price of crude goes up, we'll feel it. Having said that, I'm going to segue a little bit into what we're seeing, and I think I could hear you talk about what Dangote is doing, with the midstream side of things. I think that's really exciting because that's one of the ways perhaps that could lead to much lower, PMS prices at the pump without it.
All right, so how do you think, like in a country like Nigeria, how the government can somehow protect consumers, from escalating or higher fuel prices? You think there's any options, at this point to keep prices of fuel down?
Well, a few things. On the 29th of May of 2024, President Bola Ahmed Tinubu said subsidy is gone. That was the exact statement. And we saw that in the removal of all subsidy, from petroleum prices. And the second thing I'd say is we're just seeing it 2 days ago, the announcement of 4,000 trucks by Dangote. Again, that takes away subsidy. What do I mean? What I mean here is this, that if, crude oil, then you take some PMS from Lagos and stick it to Maiduguri. The moment he lands in Maiduguri, he is owed a certain amount of money based on the petroleum equalization fund. Okay? The difference, basically, bridging the difference. That kind of thing is some sort of a subsidy. Okay, that's some sort of a subsidy. With the announcement 2 days ago by Dangote, that's again taking off that subsidy away. So, fortunately or unfortunately, depending on how you look at it, I think we are, whether we like it or not, going to feel the full market food system. I think there are a few things here, Landy, that are really worth thinking about and celebrating. One is, I think, when I just focus on the 4,000 trucks, and pardon me, I'm focusing on that. One of the things is, we have 4,000 trucks, all of them running on compressed natural gas. Compressed natural gas, super efficient. One, very efficient. Number two, very cheap. The price of transportation across the country will drop significantly. That's number one. Number two is a controversial point. But the reality of it is this is a direct attack on a lot of the midstream companies, midstream infrastructure retailers in Nigeria. Without a doubt, there is no conflict. But when we look at something like that, Landy, I'll say two things. One, there are several stakeholders in this value chain. There is the midstream players, like we talked about, and the petroleum marketers. There is the common man. Depending how you look at it, I can tell you this. It's probably bad news for the midstream players and the petroleum marketers, but it's great news for Nigerian citizens. If you're a guy who's in Borno, you can be assured of taking or buying PMS at a very consistent price and probably much lower than you're paying. Today in Borno State, when you go, the price of PMS is about 1,200 naira per litre, something of that sort. I can assure you, if we start from, we're having this conversation in September, October, when this kicks off, you probably see the price of PMS in Borno around 920, 950, or just less than 1,000. The reason for that is one, cheap cost of transportation, but beyond that, consistent pricing, because that's what this is meant to do. And I would say this, which is slightly controversial. The reality of it is when you look at the petroleum marketers who sit within the value chain, it's not a lot of value addition. These are middlemen, and pure play economics, middlemen put not a lot of value. That's the reality into the value chain. They're there to squeeze margin and squeeze value, squeezing value away from the ordinary Nigerian. In this particular case, if the middleman goes away, the whole of that value can be returned to the ordinary person. So if you find PMS at 1,200 naira, you can find that people can buy it at 950, maybe 920 now, and 9
All right, so I'd like to get your strategic outlook, at this point, looking at the short to medium term there. What are you seeing for the global oil market if this conflict between Iran and Israel, if that escalates at this point? What are you seeing short and medium term?
If this conflict goes on for a very long time, it really escalates. Like I said, there are a couple of things. First of those is if it really escalates, then expect that we're buying crude oil at really high prices, potentially north of $100, per barrel. If that happens, then a country like Nigeria, you can be assured that would expect inflation everywhere. Headline inflation, food inflation, and for much of what we do. The reason for that is most goods are priced based on energy, and once that goes up, then you expect that we'll start to have inflation. That's number one. But in the medium, I'll say that is incredible and very good news for a country like Nigeria. We're an oil producing state. Our budget is based on crude oil sales. So from that standpoint, $75 a barrel, we bring here in our budget, we balance the budget. The $100 per barrel, then that's great news because an institution like the NSIA, Nigerian Sovereign Investment Authority, would have huge amount of proceeds coming for them to invest on behalf of the Nigerian states. It's chicken and egg. On one side, we'll feel the pain. On the other side, because we're all producing nation, then I think we can reap the benefits very effectively. The other thing to think about is if this conflict escalates and goes really high, then Africa will start to look a lot more attractive for investment. Okay, there's a lot of capital, sort of in the Gulf, in the Middle East here, and if this conflict keeps going on, then many people will be looking at where to put this capital. So expect more FIDs into Africa projects that plenty sit on the sidelines and the final investment decision is not being taken. Expect that there could be movement on that front. So we can start to see a lot more capital coming in. We can start to see crude oil sourcing. Okay, so many people who are sourcing crude from the Middle East might now have to start to look at sourcing from Nigeria, Angola, Ghana, a variety of countries, and even gas, the price of gas. So this is the other thing that many people don't talk about so much. If this conflict escalates very significantly, even around the Middle East, there's a huge amount of gas that leaves the Middle East and goes into Europe. Now, if this conflict goes up, then the price of gas becomes really high. A lot of the countries, around the Mediterranean, so Algeria, Egypt, even Nigeria, becomes gas coming from these countries becomes really, really exciting. So overall, I think it's a mix of good news and bad news. To answer the question.
Yeah, definitely a big mix there. We'll keep tracking to see how it all plays out for these market investors and consumers alike. Thank you so much, Chinande Kwa, Vice Chair, African Energy Council, for sharing your perspective with us. Thank you.
Yeah,
I'll take a break now. When we come back, we'll head straight to the markets, find out what's playing out right there with Aniete. Do stay with us. All right, let's head straight to the markets now. We'll have Aniete Edit with the details. Aniete, so much playing out with the local bourse and the international markets at this point. But for here, we're seeing the NGX All Share Index seems to be in price discovery. At this point, we're hearing figures around 116,000 new levels, 115,000 the last time we took the data. So it's price discovery at this point.
Well, you might call it price discovery, but I think I'll also call it a market recovery. Because two consecutive days, yesterday and on Monday, the market started out on a bearish note, closing Monday in the red, Tuesday in the red. So, and that's the reason is not far-fetched. It was the banks. So, but now, as we have it, if you can see that on the screen, the market for the close of Tuesday's trading session, it was down at about 114,000, but it has climbed even this figure that we had just about an hour ago.
Yeah, the figures are changing fast.
Exactly, and this is all thanks to, first, it was the banks that dented the market's performance on two consecutive days of trading. Now it's still the banks that have rallied the market, and the likes of Zenith Bank, the Fugas in particular, they came out to rally the market, especially when the CBN gave that clarity after giving that forbearance directive. But they're also affirming that Nigeria's banks remain strong. So when you hear that report like that from the financial market regulator, it kind of spurs investor sentiment, and of course,
and
seeing the
some
market.
nerves.
Exactly, because
there.
at first, investors were jittery because when he said, okay, the forbearance issue, no payments of foreign dividend, and so many others, Nigerian banks, there was that wariness on the part of investors, both
right.
local
Would you see
and
that
foreign.
knee-jerk reaction there?
Exactly.
From investors.
Exactly, and I'm sure the market is going to close in the green. But let's tell our viewers more about not just this market, not just the Nigerian stock market, but other markets on the African continent. We'll just talk about the Nigerian stock market, where we see that about 19 stocks, including some telcos, MTN Nigeria, which has hit a 52-week high, which is also what we see on the market's numbers here. Is a 52 weeks high, and it's still climbing higher, and all thanks to, like we mentioned, that the banking sector index of the market, of the NGX, is what is really revving up the market as we speak right now. The likes of Zenith Bank was up by about 423 basis points. UBA was up 621 basis points. And Access Core, 349 basis points. GTCO not left out of the picture. That was one of the biggest there, 736 basis points, 73 basis points to be precise. And First Holdco, 20 basis points. So the figures have it revving up the market, making the market to be in the green. And I saw at a glance that the market had crossed into 116,000 points. But we'll get to see the final figure when at the close of middle trading session, just about less than 2 hours from now for the market. Now, for the Johannesburg Stock Exchange, we see intraday market numbers down 0.28%, 94,387.44 for the Johannesburg Stock Exchange. Now, let's take a look at the other markets on the African continent. EGX 30 up by 0.30%, 3819.25, while for the close of Tuesday's trading session, the Nairobi Stock Exchange All-Share Index was down more than 1% at 143.10. So that's a snapshot of the market numbers for the African continent. Index is there, the bourse is there. So let's take a side switch from the stock market to the fixed income market, still within Nigeria here. We have it that at the moment there's this the primary market auction where investors' sentiment is tilting towards that because the CBN will be offering about 162 billion worth of maturities that's across the counters there. And we see that the demands are hanging around the new OMO bill, which rallied about 23.50% on offer in the secondary market, and that's down from its 24.59 stop rate at the auction. So the bond market, it opened quietly, but the interest later picked up in the 231 and 2035 and 2034 for the papers there. But to give us more details about that and other instruments of the market, let's talk to Uzo Anekebe, fixed income dealer with Access Bank, for details of the intraday primary market auction, as well as the Q2 bonds issuance calendar. Thank you for joining us, Uzo.
Thank you for having me. Good afternoon.
Okay, so I'm sure I've done a bit of analysis, but I leave it to you right now. Can you tell us what investor sentiment is looking like at the fixed income market for the primary market auction currently going on?
Yes, so today the money market is very liquid with about 1.4 trillion in market liquidity owing to the OMO auction settlement that happened the previous day. So we see in this auction, the DMO is offering 162 billion naira. So compared from where the opening rate is, you will see that we have excess liquidity for this. So we expect that this auction will be largely oversubscribed, and as a result, we'll anticipate that the rates will likely come down in this primary market auction that is happening today. we have seen quite limited activity in the secondary market, as most market participants are on the sideline waiting for the result of this auction to determine movement. But like you rightly mentioned, we've continued to see activities in the 6th Jan Omo paper, which is trading at sub 24 levels, at 23 levels. And this paper was issued by the central bank on Monday at 24.5%. So for us, we anticipate that the demand in the papers will continue to be elevated as we continue to see significant liquidity in the market, and most market participants will want to utilize this liquidity to achieve much more yield in the market. On the fixed income space, on the bond space, we've continued to see activities in the bond paper, the mid tenor securities, where we've seen activities in the 2032s and 2033 papers, which is trading at 19% handle. And just like you rightly mentioned, we have the DMO released the calendar yesterday for the bond auction that is going to happen on Monday, with the settlement on the 25th of June. And this auction, though it came as a bit of a surprise to market participants, because we saw the DMO going to offer only 100 billion naira on both papers, 50 billion on the reopening of the 2029 paper, while they will be issuing a new 2032 paper, which they will also be offering 50 billion on this paper. Most market participants, we saw a rally when this thing we saw a rally because of this, and we've continued to see, we anticipate that this rally will continue for the remainder of the week, as most market participants will try to ramp up instruments, considering the fact that the size of the offer is way less than what was initially projected in the auction calendar, which projected that there should be around 150 to 200 billion on the offer. However, we've seen only just 50 billion on each security. So for us, we anticipate that this bond auction will be largely oversubscribed due to the persistent system liquidity that we've continued to see in recent times, and we anticipate that the stop rate should be sub 19% handles.
Okay, so I'm keen about that 100 billion naira target by the federal government in this for the month of June, which is just has about some 12 days less and 8 trading days left. But why do you think that? Why is the government reducing it? I know that the government, tries to use this debt instrument to partly fund the 2025 budget and manages public debt. So, but why is this reduction in the FGM bond auction?
Yeah, so we noted that DMO has, based on the trend from the beginning of the year, they have borrowed significantly in the market. So we've noted that they don't have so much appetite to borrow more, considering their cost and the volume that they have borrowed within the year. So this is largely the reason why DMO is not borrowing so much at this time. We expect that maybe and they also are trying to space out this borrowing, so as to manage the volumes on this offer. Remember that the 2029 offer was also offered in April, and this was also offered in May. So you will look at all the volume that has been subscribed on that tenor, and they are trying to also manage their costs to ensure that they don't overload it in terms of when the settlement will happen in 2029. So partly because of looking at where the what has been subscribed on this, and also considering the fact that they have been quite active in borrowing, and most of their borrowing now is shifted towards the shorter term, which is the treasury bills, the Nigerian treasury bills, which they are more focusing on more than the bond space. However, we'll continue to see. We anticipate that towards the Q3, Q4, we will see significant borrowings from the bonds to fund the remainder of the budget for the country.
Uzo, thank you so much for that analysis. And of course, we hope that investor sentiment will continue to be healthy towards the bonds as well as the treasury bills instruments. Thank you so much for your time on the show.
Thank you for having me.
As Uzo Anekebe, fixed income dealer with Access Bank, give us details of the fixed income markets and the expectations, especially from the bond space, which is coming up on Monday next week. Okay, let's talk about the Middle Eastern markets. We know that, this is for a 6th day now since the Iran and Israel conflict started and has been escalating and generating so much of concerns around the globe, including Nigeria here, where you do talk about oil, you talk about the shipments, and you talk about even for the aerospace. Well, we see that the Dubai index and the Abu Dhabi index, both within the United Arab Emirates, they were down at intraday. The market is poised to close middle trading session in the red, but at intraday, the last track was 1.26% down for the Dubai index, which was at 5,304.46, and the Abu Dhabi index down by 0.45%, 9,493.16. Okay, so let's look at the other numbers within the region there. Tadawul down by 0.99%. Qatari Stock Exchange All-Share Index down by 0.61%. Now, for the news within the Arab region as regards this Israeli conflict, we have it that Russia's president and the UAE president have urged Israel to end the conflict in a phone call today. Russia is also warning the U.S. not to help Israel military against Iran, so that's part of the concern. Iran is also threatening irreparable damage if the U.S. enters into the conflict, while airlines have also suspended a flight after Israel launched some amount of airstrikes there. So the conflict there within the region is still escalating, and so far the market at some point had had snubbed that, but most likely there might be renewed concerns over an escalation within the Middle Eastern region. So that's it for the market at intraday. Okay, now let's talk about the markets within the United States. We see that the numbers there were a little changed. Initially, they were in the red, but this time they're in the green, and the market is eyeing that U.S. Federal Reserve's rate decision, the two-day meeting which came over yesterday, but today will be the decision day. So the market is also looking at how the impact of the Iran-Israel conflict is taking its toll on the markets. But so far, the market is in the green. And just finally, before we go, for markets across the Asia-Pacific region, it was mostly mixed territory. And this is also on the back of the Iran-Israeli conflict. So for the close of Wednesday's trading session, Ladi, it's a mixed close for the markets.
Right. All eyes on the U.S. Fed today. Consensus at this point is going to be a hold. We'll see if that's...
I'm hoping. I'm expecting a hold.
Right. We know President Donald Trump wants a cut at this point. Thank you so much, Anita, there for the details of what's playing out with most of those markets. But let's take it on to Europe now. So we have Lars Holter there to bring us up to speed. Hello, Lars. Great to have you.
Hi, Ladi. How you doing?
I'm doing okay. All eyes right now. Investors are watching out for a lot of things playing out to the markets. But, talk to me about what's happening with markets in Europe.
Well, Ladi, it's a very similar picture here, and we have actually both red and green for all the European indices, and that is simply because everything is just hovering around the unchanged line here. We currently have the DAX a little bit in negative territory, the CAC 40 in Paris as well. FTSE 100 over in London is slightly positive, but it is just changing here in very dismal ways. It's not much moving because we have, of course, the same issues here. We're waiting on further developments in the Middle East. We're keeping an eye on oil prices, of course. Here's an interesting fact. For months now, it seems markets general in Europe are not even guided by matters originating here. They're always responding to geopolitical issues, the tariff wars, then, of course, the war now between Israel and Iran. Throw in that Fed decision later tonight that you just discussed as well. Here's one exception. We did get some inflation numbers for the EU, dropped to under 2%. So that's some welcome news to many investors. But other than that, we're really just waiting on the same developments that basically markets the world over are waiting for.
Right. So much to wait for at this point. But, as for the German economy, it seems that the dark times over the past few years, we've seen a lot of, dark times there, according to analysts. But a new study says some people are, willing to work extra hard, to pull the country out of its misery. Lars, what can you tell us about this?
Well, Ladi, I can tell you that I was myself surprised by this study that I saw that says that many Germans are actually willing to work extra long days. Now, to put that into context here, for years now, we've heard a lot about work-life balance, fewer people wanting to commit to a full work schedule, like generations before them, really. We've even seen companies switching to 4-day work weeks to attract talent. But now this new study says that about a third of respondents would be willing to work up to 10 hours, sometimes even up to 12 hours a day on some days of the week. But of course, that means they might want to switch to a 4-day work week after all, but working the same or even more hours just in fewer days. I guess this is actually only a way such a 4-day concept would actually work. And then there's obviously money also as a strong argument to make these people interested in more work. People are saying that extra pay for longer hours would be a strong enough incentive for them to adapt now to a more grueling schedule. And it is especially young people that seem to be willing to do just that.
Right. I guess, definitely extra pay, always a great incentive, at this point. But is this something that will happen right away?
That's really hard to say. Ladi, there are two ways to look at this. First of all, companies can obviously switch to a more flexible work schedule as they please, but there's also an extra incentive that might bring along a major change. And here we're talking about money again. Of course, the government could work towards making overtime pay tax-free. Now, that is something we've been hearing out of the US, where no tax on overtime has recently become somewhat of a rallying cry among workers. It is actually pretty attractive, of course, and we've seen over the past few weeks that the government has understood that it needs to act in a major way to spur growth for the German economy. A tax cut for workers, and especially such a no tax on overtime provision, would definitely make extra work a lot more interesting to many people out there. But there's also one slight problem. Money, of course, alone doesn't solve everything. Some people might actually want to work more, but they can't, because, let's say, they have kids to look after. So a certain infrastructure is needed. Now, the government, along with companies, has to make sure there are enough childcare options, for example, so that those parents willing to pitch in more can actually do so. But it seems there has been a change in people's minds, Ladi, leading to many of them willing to work more, not less. And I guess that can bring us some hope.
Right. I guess, Lars, at this point, safe to say money is not everything, I guess.
That's for sure, Ladi.
Thank you so much, Lars, there, giving us the details of what's playing out right there in Europe. Thank you.
Yeah, thank you, Ladi.
Let's get a check on all the stories now. See, South Africa's headline inflation remained unchanged at 2.8% year-on-year in May, matching April's rate and staying below South African Reserve Bank's 3 to 6% target band. Meanwhile, core inflation, excluding volatile items like food and energy, had hovered at 3.0%, aligning with expectations. Well, despite these stable figures, the outlook is clouded by rising global uncertainties, ranging from geopolitical conflicts, trade volatility that complicates the central bank's decision-making process. Governor Ganyago and his colleagues have been in advanced discussions about potentially lowering the inflation target to anchor expectations and enhance economic competitiveness. With inflation showing no signs of immediate acceleration, the SARB appears to have room for further interest rate cuts as it begins to navigate a shaded path amid surging external volatility and internal growth pressures. And South Africa's Minister, the Presidency for Planning, Monitoring and Evaluation, Maropeni Rapokoba, says government is intensifying efforts to strengthen collaboration with the private sector with the goal of unlocking funding and accelerating the rollout of critical infrastructure projects. She was speaking at a high-level business breakfast hosted by the Federal Employers Mutual Assurance in Johannesburg.
It is quite important because, capacity of the state needs all stakeholders to come and play. For example, the capacity in terms of skills that we need, the capacity in terms of the finances that we need, and the capacity in terms of ensuring that those things that are important in terms of some of these interventions that are needed, that private sector is already excelling in, becomes what is at core in order for us to be able to timelessly and measurably deliver deliver on some of the things that are quite important for economic development. And we're saying that precisely because there are a number of big companies that are already there. There are systems and legal framework that we can actually use in order to sometimes maybe even front load some of these projects that we have with companies in order for us to be able to have an economic activity that would allow us to be able to create enough jobs.
So everything starts at the top. And government sets our policies, government sets the regulations under which the country operates, and government also directs the economy to a great extent. And it is vital that government gets to understand what it is like that people on the ground and the private sector feels about how they have challenges in the implementation. And they've got to engage more. I mean, you heard the ministers say as well that we've got to have more forums like this, where all parties get together. The clinics she mentioned that exist overseas, clinics of people from all sectors of the economy, from government, from private sector, from communities.
All right, to other matters now. See, Israel may resume some natural gas exports to Egypt and Jordan as early as tomorrow, though initial volumes will be smaller. That's according to the energy minister there, Eli Cohen. Israel shut down production at its biggest gas field in Leviathan on June 13th after it launched airstrikes against Iran, stopping supplies to import-dependent Egypt, which in response reduced flows to several of its industries. Shipments to Jordan are also cut off, forcing the country to temporarily suspend supplies to its factories. And in Kenya, we see the National Assembly Committee on Finance and National Planning presented its report on the Finance Bill 2025 to Parliament. This represented 6 billion Kenyan shilling drop from the National Treasury's estimate of about 30 billion Kenyan shillings. Addressing the House June 17th, Courier revealed that the bill was the least projections in revenue compared to the previous 3 years. Revenue raising, that's most of the revenue raising measures. He revealed that the government sought to collect about 344 billion Kenyan shillings from the rejected Finance Bill 2024 and later projected 49 billion Kenyan shillings in the Tax Law Amended Act of 2024. And the Central Bank of Kenya has announced the extension of operating hours for the Kenya Electronic Payment and Settlement System. The National Real-Time Gross Settlement System, effective July 1st, 2025. CBK says this follows extensive consultation with participants of the system and in alignment with the objectives outlined in the National Payment Strategy 2022-2025. The operating hours will be revised from the current 8:30 a.m. to 4:30 p.m. to a new schedule of 7 a.m. to 7 p.m. on all business days, with the exception of public holidays and weekends. All right, let's get a check on what's playing out in other markets that we track now. We see it's mostly red on the screen. It's talking about Bitcoin, Ethereum, major altcoins that we track right there. According to Coin360, it's red there. Bitcoin, a big 1.16% drop. We're seeing Ethereum with a bigger 2% drop. XRP, 3.67%. We're seeing the drops there increasing for most altcoins that we track there. So it's red in the streets then, in the crypto streets. But let's get a check on some headlines there. See the U.S. Senate passed a bill to create a regulatory framework for U.S. dollar-pegged cryptocurrency tokens known as stable coins. A watershed moment for the digital asset industry. The bill, dubbed the Genius Act, received bipartisan support, with several Democrats joining most Republicans to back the proposed federal rules. It passed 68-30. The House of Representatives, which is controlled by Republicans, needs to pass its version of the bill before it heads to President Donald Trump's desk for approval. Then we see ARK Invest, a cryptocurrency-friendly investment firm founded by Bitcoin bull Cathie Wood. They've continued selling shares of USDC stablecoin issuer Circle, offloading nearly $100 million. That's in 2 days. ARK dumped another 300,000 Circle shares from his three funds for about $44.7 million yesterday. According to a trade notification from Cointelegraph, the sale that comes amid Circle's stock tumbling 1.3% on the day, with shares closing at $149 after peaking above $165. That was earlier in the month there. And we're also seeing right there, BlackRock, yeah, most of these platforms buying more Bitcoin. They bought over $250 million worth of Bitcoin, continuing their 6-day buying streak and bringing its total Bitcoin holdings to about $70 billion. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon.
Yeah, good afternoon, Olumide. So definitely a lot for that investors are watching out for, right now. But we're seeing red on the screen there in the crypto market. Talk to me about how much, the Fed decision is playing into that, or is that already priced in?
I think the market is still ongoing concerns about the Middle East. The U.S. Fed is taking the second stage, surprisingly, and that's because the situation where the Americans take support for the Israelis might definitely heighten geopolitical concern. And you could see that risk appetite has been fluctuating despite fundamentals showing that the global economy is quite resilient. And, Donald Trump's tariffs has really caught risk appetite, particularly in altcoins. So what is really supporting Bitcoin, like we earlier retweeted, is the fact that institutional buying for BlackRock strategy already owning more than 2% of the available supply really doesn't paint the real picture, because if you look at Ethereum's price action, really oscillating around $2,500. You look at many of these altcoins losing about half from their all-time high early this year. It pretty tells you that we are in a big picture. The US Fed meeting definitely, bookmakers are saying that we probably will be able to hold rates like before, but a reduction in rates will definitely amplify risk appetite and boost crypto assets in the short term. But US joining the war because for the Iranians to lose their nuclear program, they really need a buster bomb from the United States to crack that open. And, bookmakers are saying that if Donald Trump joins that event, definitely we might be all out for a very bleak global economy, and that definitely will weigh on crypto assets, Ladi.
Right, definitely investors be watching out for the tension right there in the Middle East. But we're seeing ARK Invest there. They're dumping most of the Circle shares there. That's for the USDC stable coin. Why do you think they're doing that?
I'm not surprised, Ladi. This is a stock that has gone 400%, Ladi. They've made a lot of profits. It's really a smart decision, taking profits off the table. And looking at the space we are in right now, definitely there'll be market correction. Don't also forget that there are concerns that Circle is heavily exposed to just Coinbase and the European Stablecoin Act. So with the stablecoin being approved by the US Senate, it really opened doors for banks, and banks are really looking on how to eat on the stablecoin providers. Definitely, we'll see more competition in future. So I think on the market side, it's not surprising to see Access taking profit taken out of such immense rise within 2 weeks of listing.
Right. I guess it only makes sense when you're making profit. It just makes sense to take profit, off the table.
Exactly.
Profit is profit.
Yeah, exactly.
At this point. Thanks so much, Olumide Adesina there, for bringing us up to speed of what's playing out to those markets.
Yeah. Thank you for inviting me. Bye.
All right, so that's how major markets we track. That's how they're looking today. Definitely we'll give you more updates on what's playing out. It's a midweek trade right here in Lagos, Nigeria, and investors are still looking at the same things at this point. How's that going to drive sentiment tomorrow? You definitely find out right here. Thank you for watching. I'm Ladi Williams. From me and the team at Channels HQ, it's bye for now.